What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers up here on the left. As always, we have the broad market comprised of SPY, the Qs, and IWM. After that, we look at some companies. We have Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. Real quick, if you're interested in receiving 5 to 10 free swing trade ideas per week, then sign up for our newsletter. It's the first link in the description. We're also on Instagram, where we give away a stock scan every morning. That's at tradebrigade.co. Also, if you want to chat with myself and other traders in real time, then go ahead and join the Discord chat. That is also linked in the description. We'll see you in there. Starting off on our SPY weekly chart, as always, I wanted to leave it a little zoomed out to begin with, just to show you guys that even though we did see some red and selling action later in the week, this past week, we're very much still in an uptrend. We have higher lows forming, higher highs forming. There's no reason to really panic and expect a huge market crash here. Now, could it happen? Absolutely, it could happen. There's no way of telling the future. But like I said, very much still in an uptrend, higher highs, higher lows. No reason to really panic yet, in my opinion. But when we zoom in a little bit here, you can see we are starting to see some resistance up here at our 338.11. We have a new all-time high at 339.08. We can mark that in. But again, it could be the start of a market crash, or it could just be a reasonable pullback. When markets make a move in an advance in the upwards direction, normally they pull back a little bit, confirm some areas that were previously resistance as support, and then continue on their way. Or we could just go sideways and sort of consolidate through time. So there's a few things that could happen here, and I just want to point out that we're still very much, like I said, in that uptrend. If we draw in a support trend line connecting some of these lows in here, you can see that we haven't even really gotten into testing any of that. And we would only really be concerned about dropping out of that uptrend if we drop down below this on the weekly chart at least. So bringing it down to the daily, you can see at this hammer sort of hanging man candle that developed on Thursday's price action. This tail was the result of a huge liquidation break to the downside where we took out some of these supports and lows, but it went right to a level that we had marked off on our chart, 334.20. So if you caught some calls off of that bounce, congratulations. Next day, obviously, we saw some red there on Friday, but we are finding some support based on this lower tail here, right at our 332.18 level. That being said, we do have some pretty serious red candles here on pretty serious red volume. So should the pullback continue, our supports are kind of mapped out for us. We have a gap to fill here. It's still a tiny little gap that remains. That fills at the high of this candle, which is at $330.01, if you want to be exact. If we get down below the low of that candle, there's another gap to be filled to the high of this sort of weird inverted hammer after this red day, and the high of this candle and the gap fill sort of closes at 326.16. So that covers our supports to the downside. If things get much nastier than that, this is sort of our support, our extreme support going into next week at 320.24. That being said, our 50 SMA and it coinciding with this level here at 327.46, just about 327.50 if you want to play a round number, should provide a bit of a super support and intraday bounce. So watch out for that should we see the selling action continue. But if we do see a turnaround here and prices continue in the upwards direction, again, we are still in a very strong uptrend, then we're looking at resistance to come into play now that we're below it at this level here, 334.20, and then this sort of zone where our all-time highs are sort of at between 338.11 and our new all-time high at 338.93. Or 339.08, sorry about that. So the Q is looking very similar. We have our new all-time high, which we can mark off up here at 237.47. That being said, again, we are below some of our previous supports, or we're kind of at this one here at 230.38. So it should be interesting to see what happens come Monday morning. But you can just see, again, the massive volume that all of this red movement was on. So should we see a continued move to the downside, first stop support below is at 225.95, 226 if you want to play a round number there. And then there is this gap to fill in the chart to the high of this candle if we get into it. And that gap closes at 222.89. So keep that in mind should some aggressive selling happen. We do have the 50 SMA upsloping and coinciding with our support here at 219.89. So keep that in mind for a first touch bounce. On the upside, again, we would have to battle our way up through these resistances now that we're below them. We have 232.42. Here we have 234.85, and obviously our all-time high up here at 237.47. Anything higher than this, and the same goes for SPY, we're really playing blue sky territory, which is whole and half dollar resistance, as well as any intraday levels that form. Checking out IWM, the Russell 2000, and small caps. Now, this is where things get a little interesting to me, just because obviously we didn't make the new all-time high. We knew that was going to happen, but we've sort of just consolidated and gone sideways. The selling here wasn't really as aggressive as it was in the Qs or in SPY, and if we look at our volume, again, it wasn't really as extreme as some of the extreme situations we've seen in the past. So that being said, this sort of sideways consolidation through time is a bullish thing to me. After we've sort of made a big move from some of these lows down here, it's not surprising to just see the market sort of digest the move, see it go sideways. Next thing we're really looking for is what we see as this sort of sideways channel that we've developed where we have these highs and these lows. If we break out one way or another, we'll most likely go to the next stop of support or resistance. So because we have a red candle here, we'll cover the support first. It looks like we have a key support in here that would need to break down at 166.37. You can see touch, 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 touch. It has acted as support every single time. That 50 SMA is going to start to coincide with that level, but if it does break, look for a move to our next level down below, which comes into play from all these data points in here. That's at 165.38. Anything lower than that is sort of this area where we saw extreme amount of support here around 164.26. If that does get broken, then you can see there's quite a ways to fall until our next major support based on some of our previous levels off the chart to the left here, as well as this extreme sort of pullback after this move to the upside. That's at 159.75. So that's a worst case scenario, our extreme support to the downside. On the upside, if we break out over this resistance here at 168.70, we're looking for a move to 169.97, and then this sort of high in here at 170.56. Anything higher than that, and we're going to target our 173.29 resistance. But again, the whole market would sort of have to be moving in the upwards direction, in my opinion, for us to get there. If you guys are enjoying the analysis so far, be sure to leave the video a thumbs up. We might actually hit 100 likes this time around, and that would be really cool. I would genuinely appreciate it, and I think the YouTube algorithm would as well. Let's see if we can do it. Jumping right into Apple, you can see that we did violate our support trend line on Friday. That's no surprise, obviously, if we're following the Qs and SPY as a whole. Apple being a big portion of both of those things, boom, seeing that dropout is, like we said, no surprise. But we are seeing this lower tail being developed right here at a previous resistance, which has then been support here, resistance, support, resistance, so on and so forth. So should be interesting to see early on in the week if 312 holds as support or if we break down below it and sort of retest the low of Friday. That being said, if we continue lower, we're looking for a first touch intraday bounce at our 50 SMA that is upsloping, so keep that one in mind early on next week. Anything lower than that, and we're looking at this sort of support down here at 304.15, you can see boom, touch here, and then previous resistance there. Anything lower than that, $300.27, and then lower than that is $293.85. Anything to the upside, if we see this just as a sideways consolidation through time, again, if we zoom out here, we're still very much in an uptrend. We're just sort of consolidating sideways up here. So if we see a turnaround and a move back to the upside, we first have to fight through 319.17, 322.92, and then 327.65, our sort of all-time high up here, 327.85. This is off by about 20 cents, you can see there. So keep that in mind to the upside. Anything higher than that is blue sky territories, whole and half dollar resistance, as well as any intraday levels that form. Netflix, again, still looks like it's flagging to me. We have our few days of up and then some sideways consolidation pullback. That being said, we pulled back perfectly into our previous resistance, which is now support at 375.52. Price, this is just a beautiful pattern. It's pretty much rinse and repeat here on Netflix. We see a nice move up, consolidation. You can buy back into that next support. So we'll see what happens if this one holds early into next week. We're sort of looking for some hammers to develop around this level, or just a sign in general that buyers are still stepping up and want to push prices higher. We'll then have to battle up through 386.03. And then coming into our recent swing high up here at 392.95, we'll mark that one off just as a reminder if we do get into that area to expect some resistance. If we break down and go lower than our 375.52, though, we're looking at support to come into play at 361.79. Anything lower than that, and you can see it's quite a ways until we come back down into our next sort of area of major support where all this consolidation was happening, and that's at 343.03 to 338.12. It's sort of a zone, if you will, where you can see all these different data points touching in this area. So keep that in mind to the downside. Again, anything over that 392.95, and it looks like we're in pretty blue sky territories. It's open to the upside there. Tesla is looking pretty interesting. We do have a lower high that was set here on Wednesday's price action. This big hammer candle lower tail did fill the gap there, but there is still a gap that remains below. If we break down below this candle here, the gap fills to the high of this candle, which is at $812.97. So keep that in mind if we see any action to the downside. But what's interesting here is that all of these are essentially hammers. We have a long tail here, meaning buyers bought the price right back up. Buyers bought the price right back up. So we might see sort of a cup or U-shaped bottom start to form in here, depending on what happens early into next week. So keep that in mind. It looks like there are some buyers in this area. That being said, if we break over the high of this sort of lower high, if you will, then obviously the next thing that makes sense is to retest our all-time high up here at 968.99. Alibaba is breaking out to the downside of this symmetrical triangle, if you will. It broke through its 50 SMA quite nicely on Friday. We had a nice snap down below it, and then we went right to our supports here at 211.09. So if we see any lower price action than this, then we're looking for our next support to come into play at 204.77. Anything lower than that is $200.71. And then our sort of extreme support way down here is at 195.08. Again, red volume is increasing, so I think it might be likely that we see some continued downward action, if not just some sideways consolidation at this point. If we see any sort of major move to the upside, again, I think the whole market would have to turn for this to really happen. We're looking at having to battle back up through 218.04 to 219.82. That's sort of a resistance zone you can see again in there. If we get higher than that, then we have our resistance trend line to contend with, which is sort of downsloping here and might meet up with price around 222.50, somewhere in that area. So keep that in mind early into next week if we see a move to the upside. If we break through that, 225.86 and then 231.14. So I've gone ahead and removed my magic trend lines from Facebook on the left here. They're no longer really in play, so we'll just focus on what we have at hand. If we break down below our support, again, things look very similar pretty much across the board here Thursday, Friday with downwards action. We snapped through our 50 SMA, but we are at our 208.33 support. So if we break down below that, we're looking to target 205.39 and then shortly thereafter our 203.42 level. It might be even a little bit lower than that. This probably isn't as important as this support down here, which comes into play at $201. If you want to play a nice round number there, we'll just mark that one in there. Anything to the upside, and we're looking at battling back through that 50 SMA, so keep that in mind if we see a upturn here. Again, our next resistance point is at 212.79. Then we'll be contending with our sort of resistance portion of this rising wedge, and that's, depending on when that happens in the week, it could be anywhere from 216.71-ish to 218.25. Let's just call it for round number 6, so keep that area of the chart in mind. So what's interesting about Nvidia is that it's still holding its pretty massive gap up here. So that's cool to see, especially considering all of the red that's in the market. Even though we've sold off, we're still well above our sort of gap area. That being said, if we see it hold, we're looking for support to continue and hold up here at 286.16. Anything lower than that, and obviously we're in the gap fill territory, and the gap fills to the high of this candle at 273.48. That being said, we should see a gap fill reversal, at least intraday, at that level if we do get all the way there. Anything to the upside, and we're targeting our sort of resistance area up here at the all-time high, or recent swing high anyways, at 316.32. Again, I think it will take the whole market reversing to the upside to sort of get back up there. In my opinion, after we sort of held this gap, we're going to sort of consolidate sideways as the market continues to digest it and figures out whether or not it wants to advance or pull back more. Microsoft, again, looks like everything else, coming right down into our support at 176.29 just about. So keep that in mind. If we break it down, we're looking at a gap fill to 174.13, just about the high of this candle. Anything lower than that, we're looking for a move to 170.16. Lower than that, again, tiny unfilled gap here, partially filled from this day here, but still remains unfilled to the high of this sort of hammer-ish candle here at 168.75. Anything lower, well, that's going to sort of coincide with our 50 SMA. That's sort of the extreme end of supports. If we start to see some movement to the upside, and obviously we're going to have to break back up through our 183.21 resistance, anything higher than that is 185.54. Higher than that, all-time high up here at 190.70, quite a ways away. Again, I sort of expect the price to sort of consolidate sideways along this sort of support zone. And last but not least, we have Amazon, which again is holding up its extreme gap up. We've sort of broken down out of this support flag, if you will, where we had these two supports and resistances here. So that being said, our next target to the downside, should we see continued red action, is to 2054.94. Anything lower than that is 2025 for round numbers sake, and then 2000 for round numbers sake as well. If we get down into this gap, don't expect it to fill all in one day, but it could very well be a 50% gap fill one day, and then the next day a full gap fill, or a 50% and then a retracement out of it. Just essentially what I'm saying is don't expect the gap to fill 100% in one day. If we see any sort of major market reversal to the upside here after these 2 days of red, we're looking at our all-time high resistance up here at 221.85.95. Anything before that might be somewhere in this area. We could target 21.57.08 just because it was support, resistance, 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 support here. So alrighty, that's going to wrap up this week's episode of the Weekly Watch List. If you enjoyed the video, be sure to leave it a thumbs up. If you found it helpful or you have any questions, let me know down below in the comments section. Subscribe if you'd like to see more of this type of content. And as always, have a green trading week.